You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. Welcome back to the option block. Oh, what a day it was, and indeed still is. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. You guys certainly weren't wanting for a little excitement, a little action today. Things moving. Things were shaking. Some may say the zombie apocalypse was upon us, or some may say this was the day we've all been kind of waiting for and or I guess dreading, depending on which side of the fence you fall on, for the better part of well over a year, ever since the Trump election. Everyone thought this was going to happen after the Trump election, and it did, ever so briefly. And then we're back to a year plus of just extended bull tranquility. We'll see if that has all come to the end. We shall discuss it forthwith. My name, of course, is Mark Longo, and I am joined on this program, as usual, by my cohorts, my partners in crime. I'll spin the wheel in a second. While I do that, to see who we got today. By all means, you guys can always join us live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via the old Mixlers, Mixlr. Grab that link, set it, and forget it. Follow us in Mixlr if you feel so inclined, or just follow us on the old social medias at Options, easiest place to find us. And you'll see that link go out pretty much all the time whenever we're doing shows. So grab it once, put it in your link saver of choice, and you're good to go. And of course, however you listen, live after the fact, hit us up. Questions, comments, insights, pearls of wisdom. I'm guessing you guys have a few of those today. So let's get to it. Joining me on the old Option Block All-Star panel, let's spin the wheel. Who do we have starting off from the, we got a full conglomerate on the old All-Star panel today. Let's just go in order of my screen from left to right. And the wheel shall first land on the greasiest of meatballs, Mr. Mark Sebastian. Mr. Meatball, welcome back to the show. What an auspicious time to launch a vol fund, huh?
Yeah, no kidding. Our stuff would have been firing. You know, we still have not made an official trade yet, but all of our signaling would have started to fire on Friday, and then by this morning, giving us all kinds of reasons to be long. And boy, what a day! So I've only got a few minutes to chat, but when a day like this, I feel compelled to join this panel for at least a few minutes. That was some of the craziest stuff I've seen in a very long time. I mean, the last time I saw something like that was August of 2015 when we had that crazy open where we were down 100 and then end up down 50. We saw something similar today. I mean, I was sitting there, we were down 50 or 40, something like that. And if you blinked, you missed the fact that we went from like 27.20 to 26.50 in about 3 minutes.
Hold on to more of that. I want to welcome the rest of the panel. Then we'll get right into it because I know we got a whole bunch of stuff to get to. Let's get to next on my screen, Uncle Mike Tussaw, RCM Walt Advisors. Are you alive, sir?
I am alive and well. Today's the day that protecting yourself with risk reversal collars and things like that, it really doesn't seem so bad.
No, it seems pretty good. And also joining us, we got an option pit / Carmen line, a dual presence here on the show, a rare treat indeed. Also joined by the Rock Lobster, who's in his zombie apocalypse shelter up there in Maine. Welcome back to the show, sir.
It is good to be here. I want to be in the business of selling market condoms today to protect yourself.
Yes. I think we all want to be in that business. Speaking of the business, let's get to the business. It's time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody. As we were just alluding to on the show, let's just get right into it because it was, I think crazy town is the best word to describe it. Oh, what a day it was today. And markets just all over the place. Started off firmly in the red. Seemed like a pretty aggressive bloodbath, around 1.2% in the S&P. So, okay, 1% sell-off. We're probably overdue for that. We probably need a little bit of that check-in. People, hey, welcome to the new Fed chairman, huh? Yeah, you're sworn in. Bam! Let's just annihilate the markets. I think someone tweeted a great graphic or chart today of Ms. Yellen just skipping out of town while all the homes were burning behind her, and probably feels a little bit like that to her right now. Markets ended up the day off nearly 4% on the day, depending where you're looking. S&P off nearly 4%, over 100 handles. The Dow leading the charge off over 4%, even getting down off, I think it was 1,500 points intraday. So the point leader clearly goes to the Dow today on the downside. Q's off about nearly 4%. And I'm going to say percent over percent, so everyone cover your ears. But the VIX up 85%. VIX cash. It's hard to say that with a straight face. Up nearly 15 handles to end the day, getting as high as around the 35, I believe, level. I think that was the high. Let's pull it up right here to make sure. 35.73. Yes, that was the high today. So just absolute crazy town. All right, Mark, we cut you off mid-sentence, but there's a lot to get to. Just crazy town. What are your enduring impressions from today?
I'm looking at the VXX being up 11. It's up another $6 after the close. It's up another $7 after the close.
Has it erased? Is it back to pre-split levels? It was approaching that. Let me see.
It's $49 right now.
That is the split. That is the reverse split price. $49.
I mean, this is it's over 50 now. This is some of the nuttier movement I've seen, and this makes silliness feel silly because it's so silly. I've never seen anything like this before, and I mean I have, but it's been since 2008 that we saw vol move like this. I mean, if you look at where VIX futures are right now, remember they got a huge rebalance today. The Fed future on the day, let me get this, is up. Let me take a look here. The Fed future is currently 31 quarter at 31.30, 31.40, 31.30, 32. It's now just jumped to 32. So it is up almost 75%. If the future moves a couple more points, Mark, think about this. If the future moves another couple points, so let's say somehow in the next 5 minutes it gets to 34. That'll be an 80% rally for the future market.
You know, I'm just thinking, we had someone write in last week and ask us, what's the craziest thing or the weirdest thing you've seen in the option markets? If that guy just waited a week, this might be up there.
This is up. XIV is currently going to be down. It's down another $7 after the bell. So it's down 25% 23% today. And let's not forget that this is just UVXY is $25. The SPX, so I'm guessing right after the bell, the S&P futures are taking more pain. Yeah, we're off another $40 after the bell. So, or $30, I'm sorry. So this is they're not messing around today, Mark. I'm just going to go out and say it.
The robots,
they're not messing around.
Robots clearly throwing in the towel there towards the end of the day. It was moving so much, it was impossible to get the pulse on anything. We were trying to put out questions and polls throughout the day, even on things like VIX Cash and it was impossible. By the time we posted one about with the low 20s range, it was trading 32, and it's just madness pretty much. However you cut it. So yeah, whoever wrote in last week, I'll have to dig that up, saying what's the weirdest thing. Yeah, you may have just seen it. We'll have to see. We'll have to do a full digestion to see. We're still kind of in the afterglow / after terror of this event, but still. Uncle Mike, maybe you kind of signaled this on the show last week when you were kind of hinting that you were, the ever permeable, the resident bull here on the show, even you were starting to dial things back a little bit. So maybe that should have been the hint. I think I referred to you last week as a bit of a canary in the coal mine. So what was today like for you, sir?
Let's see. So my kidneys, hopefully they can recover. Let's start with that. But no, today was one of those days to where came into the day on the SPY aggressive strategy. I was actually 100% cash in my ultra aggressive strategy. Now in the hedging strategies, I did some adjustments on it. Nothing too crazy with that. I actually I had talked about on the show a couple weeks ago how I was in 100% house money on the risk reversal I had started from September. I actually got out of the call that I was in on that and restarted a new risk reversal today on SPY. I did that in the morning just as a general thing. I'm glad I did in hindsight because now I have a cushion again and I took a lot of money off the table with it. So that one was just by dumb luck basically and by random chance, but I'm glad I did it. But in terms of what I'm looking at from a day-to-day standpoint in the ultra-aggressive SPY strategy that we do. Like I said, going into today we were in cash, but we open up the day and SPY is in like the 273 range, around 273, something along those lines. I'm like, well, we're at 274. I have to be bullish in some way, so I have to do something with it, especially at these low of levels. And by low, I'm referring to 100 points higher than where we are right now in the S&P 500. And so I put on just a 1 week 271, 269 put spread and just put in an order to where if we go to 271, I'll just get out of it. So needless to say, market went straight down and about, maybe once every 2 or 3 years, I end up with a day trade on the books. And today was actually a day trade. But with that being said, that trade lost 40 cents when SPY lost $11.50 on the day. And so 40 cents is something to where it's plus or minus. It's very common with that area of the portfolio. But then shortly afterwards, you always have the wonder of, should I have really gotten out? You always feel that way as a trader. But obviously, I'm glad I did get out when I did. But for right now, just with the events that happened towards the end of the day, or with the market movement as it's happened towards the end of the day, I'm in officially not today mode. I mean, there's a time to where this is going to be a buying opportunity. Not today. And that's probably what I'm going to say tomorrow as well. And we're going straight down right now. Now, are we going to keep going down? Who knows? But at some point, I do want to get back into this market. And I think this will be possibly the buy of the year. But from my standpoint, not today.
They are killing things, Mike. Since we talked, VXX is up another $2. I don't know what is going on with the VIX futures, Mark, but they have moved. The Feb future in VIX closed at 3 o'clock at around 20. I'm looking at 23.10 is what it says, and in the aftermath, we've got that Feb future now trading at 33. So it's made a 10-point move after the bell, Mark.
Yeah, SPY is down almost $4.
This is I've never seen anything like this. And there is some sort of, and it's more in the vol product than even SPY, right? SPY looks bad. It's, down $3. We closed 263.93. It's 260.80. XIV is off $7.50. SVXY, which is very similar, is off another. It's down 40%. It's going to be down 40%, 42% today. It's off another $7 after the bell. This is the, and I'm going to leave this with and let Andrew elaborate on this. But all that time when we said selling vol is not as easy as you think, there is real danger in just being short vol if you don't have a hedge on. Let me just put SPXY in perspective. Let me take a look at this. SPXY on January 12th, it was $140. It's currently $62. It's lost just the amount of wealth destruction there is something I've just never seen in a very long time. And there are people racing, and it's in the vol complex is doing a lot more than the S&P 500. So I don't know what to tell you other than
it's only,
wow.
SPY is only down $3 after the close. I mean, it's not nothing, but it's only 1%.
But what's up with the VIX futures are
1% in 15 minutes.
Yeah,
well,
the VIX futures are exploding. You know what the volume is on the VIX futures right now? And they're still trading. They just stopped. Volume on the day in the VIX futures was 1.13 million contracts traded. Almost 500,000 in Feb settling 33 and a quarter, up $10 after the bell.
Well, Mark, I'm pricing some of the flies we looked at. I was trying to price some flies.
I sold that. By the way, I sold that last 50 lot call spread at $5.50.
You have to.
I had to. All right. And so, folks, I just want to, this is kind of, and listen, I'm not saying that I'm brilliant. Nobody here is, except for obviously Mike. But when things seem too easy and when a trade just seems like it can't miss, that is why trades like this get set up and why and how this stuff trades the way it trades. I'm going to wonder. I've got to wonder how big the traded settlement was to push things around that much.
I'm just looking. I'm kind of curious looking at today's numbers. If this is going to be the end of the endless just short VIX debate that we've been having for the better part of the last year. Is it overdone? Is it too much? Or is this going to just spark a renewed round of flurry of interest in it? I don't know. Judging by these after-hour numbers, it seemed like we were recovering a little bit into the close, and now in the after hours, it seems like we're exacerbating to the downside again. So in the early blush, it seems like no. It seems like the worst is not yet over here, as we're still. I'm still just kind of digesting the fact that VXX just pretty much took back an entire, well, not a year, but post-split, almost half a year's worth of erosion just like that. So yeah, this day is unprecedented on a lot of different levels. Mr. Rock Lobster, I know you were busy dealing with the mentees, dealing with the clients, also making sure Mr. Meatball didn't go crazy blasting out puts over there in the Carmen Line Prime Meridian. What caught your eye in today's activity, sir?
And with that, hey, I'm going to let Andrew take over, and I'm going to hit the bricks. But I just felt like I had to chime in here today.
Yeah, this was a fun one.
If I don't speak to you guys on Thursday, I can promise you I'll do Vol Views Friday.
All right, well, go forth and prosper,
right,
sir, and survive.
Have a good night, guys.
That's the mantra: survive till Vol Views.
Survive till Vol Views.
Here we go.
Survive till Vol. I don't know. So again, this is the reason why we launched our Vol newsletter, just to to help teach people how to trade vol in a different way. And it's the vol products. A lot of options are just education. You got to understand how they work and how things work. But as of right now, I think there was probably a lot of people selling futures, probably a lot of people that were, short into, let's say, the end of last week. And, I think we woke this morning and everything was kind of even and bouncy. And actually all the vol products went back to their original state. I think VXX was 32.26. Actually, when I had the conversation with Mark to kind of load up again. And so, but the futures weren't acting very well, the vol futures. So it is, and now it's after hours, the market's not open. There's, one of the things to me for vol is when the market starts going and there isn't like an end to it, that's when it becomes a much more difficult situation. Because, you have, I know nobody does, and Mark and I were talking about this. Everybody's worried about interest rates, but nothing is really concrete. Maybe something with China, but nobody's really sure. Then you got this, the memo, which is politics, but it's not a vol fixing politics. It kind of makes things a little more muddled. So there's just slowly things muddling around, and the market's at an all-time high. But I think this is a little, it's goofy just in the fact that, oh my gosh. But the reality is VIX is where it should be for a market that's moving like it is. Everything is, I'm not going to say quote unquote normal, but VIX is acting like it should act for an SPX that's down over 2%. I mean, this is where it should be. It's more like 3.5%, 4%. 35 VIX is totally, it's a reasonable price for the selling that's going on. What's funny is, like the Qs, Apple, most of those stocks, they actually were kind of flat to green on the day, to be honest. So this one's a little, I view this, it's an odd sell-off, but whatever it is, a sell-off is a sell-off. So, and that's the deal behind it, where you don't really know what starts them, but things can keep snowballing until there's a reason for them to stop. Like we've been used to the last 8 years. Oh, Bernanke's going to step in and do something with rates or do something with rates. But right now, there's none of that, right? They're pulling out of QE. They've ended that regime. I don't think they're restarting it again. They have no reason to. And just the hard reality of all that easy money is gone, or they're going to start slowing it down, and maybe finally it just dawned on everybody. We got a new Fed chairman, and we'll see where it lands. I don't know. But I think that's kind of where we are at this point. We just see where everything lands, and then on we go. But right now, gold is up, fractionally. The treasuries are up a little bit. So as a flight to quality thing, it kind of wasn't there after having a pretty awful, week and a half. But I think the vol products are just suffering from VIX is going up. 30 VIX is very reasonable. We were 10 to 15 points backward, which usually market doesn't know what's going on when it gets like that. So this is what I would have to say is I don't think VIX is made easy today. I think it's a result of a lot of market movement, and it's going to stay this way until the market movement goes away.
Now, speaking of market movement, not to turn this into too much of a vol views episode, but it's kind of unavoidable on a day like today. But Mr. Rock Lobster, easy for me to say. Did you happen to catch where VVIX topped out today, sir?
I did see 200 print.
203.73. When we get to over 100, if you don't follow VVIX listeners, it is, of course, the volatility of volatility, aka the volatility of VIX. When it gets north of 100, people start to take note. That's certainly elevated. When it gets into the 120 to 140 range, you're paying attention. 200. Too bad we don't have Mr. Rhodes. I think he's off in London for a conference. He would know the exact where that lands on the historical charts of VVIX. But I'm looking right here, and
it's freaking high.
It's pretty darn high. It blows away anything for the last 2 years, which is unfortunately as far back as my data goes right here. But this is up there, sir. So yeah, whoever wrote in last week saying what's the weirdest thing, this has got some weird smell to it. Let's just say.
Well, another thing too is with clients, we were just trying to figure out, because I have sort of, the way I manage vol trades, it's kind of vol by zone. Are we zone 1, zone 2, zone 3, zone 4? Clearly we're in zone 4. We're in the highest zone. It's been a while. And I was just slight banter with some of the guys in our program. We're like, I'm mostly just trying to find something that's even remotely executable. It wasn't. A lot of people were just taking off their long vol and unwinding it. But there wasn't, it was hard to find something to execute when VIX was all over the place. VXX was actually trading fairly liquidly because that underlying, when the crap does hit the fan, the underlying is an ETF after all. It's not a future. It doesn't have all the vagaries of the VIX. So it is an easier thing to get in and out of. So as once vol jumps out of zone 2, it becomes a more interesting, it becomes a more tradable vehicle, at least for me. VIX is more fun when you're kind of 16 VIX or lower, when the opportunities are sort of there. But now it's just, it's all blown up. So you want something that you can trade, like SPY, you can trade. Long-term vol and SPY you can trade. You can start to look at upside in VXX as long as you trade call spreads. But the call spreads now I'm looking at like 10 or 15 points wide. And this morning we were looking at a 6-handle wide call spread. So it's everything just kind of, you have to put your hat on for where you are in the vol. So, now you have to assume that a 2% move tomorrow is going to be below average. And then you price things around that. So you just have to put your realized vol head on where you are currently, and then see how things are priced from there. And then the next step is execution. So actually, a lot of the larger equities are probably a little easier to execute in than, let's say, VIX, some parts of the VIX complex are. So you also have to go like, where's the opportunity? Is Apple an opportunity selling the 150 puts, 145 puts, trying to get that high vol long delta somewhere and pair it off with a vol trade, which is the kind of trade I like to do. Because, we could be like this for a couple of weeks, and then VXX or so backward, the vol products are just going to keep blowing up. So there you go. That's my 2 cents.
Speaking of vol products blowing up, I was digging here into some data while you were talking, sir, on our old friend VVIX, going as far back as this one goes back to, I can get about a little over 5 years on that. I can get about 2013. So I will give you this hint, Mr. Rock Lobster. Uncle Mike, you can play along if you like to. I will give you this hint that 200 is not 203.73. Today's number is not the 5-year high. It did get higher, so I will put it up to you, Mr. Rock Lobster, because Mr. Rhodes isn't here. It's the kind of game I would usually quiz him on. He loves his historical facts and figures for volatility products. What do you think is the 5-year high? And then B, when do you think it happened?
Sorry, I just got some news from one of my birdies on another topic that it's possible that XIV or SVXY could have hit their tap level. Those long vol products. The
Thompson twins are tweeting about that. They say XIV may not go tomorrow.
So
TVIX all over again, babe. We were joking about that 2 weeks ago on Volviews. That is XIV. I mean, it's the same people, and is it going to be the new TVIX with all the the issues with around TVIX, and it kind of imploded. At the very least, they were just tweeting that. I saw that come by, and I haven't had a chance to dig into that myself. But yeah, that'd be a good reminder for a lot of people out there. We've been talking about this on that show. That dig into those prospectuses of these crazy, funky vol products you love to sling. And days like today are when those products tend to come unhinged. So I'll have to dig into that a little bit as well. Speaking of funky vol products, Mr. Rock Lobster, 5-year high on the VVIX. What do you think it is? And when do you think it happened?
The 5-year high?
I'll give you a hint. It's not today at 203.73. It is higher than that.
Wow. A 5-year high? Hold it. This is 2018, so that would be 2013. What the heck happened? That Ebola crisis?
I'll give you a hint.
October?
I'll give you a hint. The meatball alluded to it when he was on earlier.
What the heck was it?
Uncle Mike, if you want to play along, you feel free, sir.
I'm going to yield to Andrew on this one.
You don't know historical VVIX charts? What's wrong with you, sir?
I don't follow the historical VVIX, I have to admit.
We're getting all Volviews-y here, but it's fun. I'll give you a hint, Mr. Rock. He was talking about the August meltdown of 2015, and that's pretty much when we saw it. August 2015, it was the high of 212.19.
Wow. That's right. I forgot about that little crash we had.
Yeah, it was that weird kind of aberrant day. VVIX went from 77 to 212.
Wow.
So that's a good data point for you there. That's quality data. But outside of that, today was a real trade, I would say. Maybe the first time with some real things backing it up. But you're right, that XIV stuff is a little funky. I was looking into that myself, and it's it's a little scary. A lot of people out there, they do, all joking aside, they do like to and rely on these vehicles as their way. They don't want to sling the futures for whatever reason. They don't have a futures account. They don't want to deal with the hassle, the margin, anything else, or they just like the way that product tends to trade. Well, guess what? You don't like it when it doesn't trade, which is potentially, we were joking about this on vol views, but hopefully that is not exactly what comes. Actually, really quickly, Mr. Rock Lobster, because we talked about it on vol views. This is obviously not vol views, a little bit different audience. If you want to really quickly run down why that is with XIV and what will keep it from not open, not trading tomorrow.
Well, it's the issuers have to create more units, but also is, the amount of capital they have is short. So when you have these huge run-ups, you being short when vol futures do this, you run out of money. And I think that could be part of the problem with how the futures got so bid was, again, I'm speculating here on why things got so crazy at the end, but maybe they just had to cover all these, and there's just a lack of liquidity in the covering. So that's why, and that's what XIV, it's in the prospectus that it can go away. So the reason it's real simple. I mean, if you're short something, it's like, if you're short a future and you don't have the margin to cover, they make you cover. But here, XIV only has the ability to, whatever cash they have on hand. And if they run out of margin, then the issuer can choose not to produce more units. And then there's basically no money there, and they're toast. And you're left with, nickels and pennies. I think XIV went as low as, where the heck did it go? It went as low as $4 or $5 in 2011 when you had some of those vol spikes. But I think on a percentage basis on a day, this is the worst as far, like a 20 handle move, which is threatening it. So I've only, at least for me, I only trade XIV when I could buy VXX calls, because then you get kind of the opposite. You can ratio it and make more money in VXX than you would lose in XIV. And I didn't have any XIV on at all. We were looking at call spreads for bounces in SVXY, but that was against being long a lot of VXX call spreads. So it's just one of those things where, it all sounds confusing, but as far as how the product trades, I mean, it owns its short futures, and they can only go up so much when you got $50 in the account, and once you're down to $50, the managers of the product, they got to shut it down and maybe start a new one. So we'll see how all that works when they start posting their information.
Yeah, I wonder how, I'll have to check it in, how our friend the Whale did out here in VixLand. He's been rolling that, 15-25 with the 12-put kicker out there in VixLand for the better part of, 4 or 5 months now, longer. It seems like forever, but it's only been about since July, actually maybe longer, July, about 6 months. But still, he just rolled it just on Thursday or Friday, I believe. So interesting timing. Yeah, he may have actually wanted to keep it a little bit front month. Might have been a little bit more interesting this time. Still, in March is not that far out. Looks like 250,000 of those 15s did trade today, so maybe our friend took some off the table. We'll have to parse it exactly for later on this week. On vol views time, exactly what went up. VIX, of course, just printing options today. Listeners hitting, I think that's a new record, 3.6 million. The ADV is hovering around 900,000. That shows how active VIX has been of late. And today, hitting 3.6 million, 3 million on the calls, 600,000 on the puts. Go figure. People want to trade some VIX calls today. Who'd have thunk it? Speaking of which, if you guys out there are confused, or if you, Mr. Rock Lobster, or you, Uncle Mike, if you indeed are confused, the market's topsy-turvy. It's going up, it's going down, vol's going up, it's going crazy, things are imploding, XIV may not trade, madness, dogs and cats living together. If you're just put off by all this craziness out here in mass hysteria, don't worry. Goldman is here to talk you off the ledge. They have the answer for everyone out there. Goldman says, things are kind of crazy right now in their very, very precise research report today, coming out here and saying, they see extensive risks in the market here, both positively and negatively. So the market could go up right now, or it could go down. And so, therefore, what you should do is you should buy some options. It should be a call on the upside in case you're interested in continued bullish exposure. But don't deal with the underlying, too much downside risk. Just buy a nice out-of-the-money call, set it and forget it. Or if you're long the stock, just buy some puts. And that's what they're saying. So on the one hand, we applaud anyone who's advocating using options because that's kind of our bag here. But on the flip side, it does seem like such a traditional research letter talking out of both sides of your mouth. The market could go up or it could go down. So you should really buy calls or puts. I don't know, Uncle Mike, does that assuage you as a scared bull right now that Goldman says you should buy calls or puts?
You know what? I think that's right up there with my 50% guarantee that I give that the market's going to go up or down. I think that for the HR people at Goldman, I'll be sending in my resume tomorrow. Not.
Isn't it amazing someone gets paid to do this research? They put out a research paper that proceeds to set up a great bull case and then proceeds to just cut his legs out with some great data on a great bearish case, all in the same paper, and then proceed to, say, buy options, which our desk would certainly be happy to help you with. I just had to mention that one. It's kind of funny. People get paid to do this, which always boggles the mind. Speaking of boggling, really quickly here, it is a lot of earnings going off this week. I'm not sure if we'll have time to get. Not a lot coming off this today anyway. We have some coming out later this week, Tesla and others. Maybe we'll have to talk about those. Thursday might be a little bit too late for some of them, but we shall see. But it was a hot month, all things aside. In January, we have the numbers in here from our friends at OCC. January was the third highest month ever over there for them in terms of cleared volume. Remember, OCC clears a lot of stuff. Of course, that stands for the Options Clearing Corp. They do stock loan. We don't get into that stuff and a bunch of. They also do cleared futures, which is of interest to us here on the show as well. But let's start off with our main interest exchange listed options volume hit 468, almost tick under in million contracts in January. It's a 42% increase from January 2017. 42%. So. A good start to the year there. Year-to-date ADV up 36% from 2017, 22.3 million contracts. Drilling down a little bit deeper, equity options volume in January, 411 million contract. That's up 41%. Cleared ETF options volume is 173 million contracts. That's up 40% from January of 2017. A little bit further down the rabbit hole, index options volume. I'll have to clarify this with them because it's confusing where SPY falls, if it's ETF or if it's index options. A little bit of both. But I'm clear. Usually I mean the SPX. Still, January for index options, 52% increase. Crazy time. 56 million contracts. Cleared futures at OCC, 11, almost 12 million contracts. 23% increase. Why is that of interest? Well, of course, that includes primarily VIX futures, which, as we talked about today, setting a new record again today. And also our old friend, or I should say our new friend, Bitcoin futures at the CBOE at least, not the CME. They clear their own stuff. So CME, CBOE Bitcoin futures doing 150,000 contracts in January. So a little bit of interesting stuff, a little bit of interesting numbers for you guys to digest as you're digesting this crazy day. We're going to keep helping you do that with a little quick run through of the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we usually hold court a lot earlier, but as you might imagine, a lot of things happening today that we kind of had to discuss. I mentioned there are some earnings popping off this week as well, which is going to seem like so much noise into the cacophony of other madness going on this week, but c'est la vie. We shall discuss it nonetheless. One of the names that's coming up is Tesla. So we always like to look at the funky out-of-the-money put volume in Tesla to see what's going on. And today, in a day when Tesla off 3%, about 10, 11 handles, so pretty much in keeping with the market out there, a little bit less actually. Let's see, were people loading up on these crazy out-of-the-money puts? Actually, not as much as you might think. Out here in the Jan 2019 50 puts, the puts that kicked it all off for us, only doing 86 contracts today. I think a day like today, you might see a lot of action in those. 36,912. So actually coming back down over 37,000 out there in the OI. So someone closing a little bit of their paper out there in these puts, which is also fascinating in and of itself. Someone opening and closing trades out here. But if you want to know where the put action was, it was in the Jan 2020 50 puts. That's where the love is these days. 290 going up today. Over 700 on OI out there. This thing's trading $2.30 at $2.45. So these are rich puts out here. And yet still interesting stuff. Speaking of interesting, by the way, we didn't mention at the top of the show. We got distracted. But all the people out there who've been talking for a while about Bitcoin being this great non-correlated asset, used to switch from gold into Bitcoin. Not so much today. Gold was up somewhere around 0.2%. Not great, but certainly not off. What was XBT off like 16% plus on the day? So much for that diversification into crypto theory that's been floating around out there for a while. But I digress. Let's get into the actual paper we talked about. Actually, this is kind of a bit of a final review of a trade we first profiled last week on the show, a week ago, actually. It was weird paper, as you guys might remember, listeners, in Colgate-Palmolive, ticker symbol CL, closing today off about 3.6%. So getting all that, not really smart beta, just beta here, moving pretty much in lockstep with the market off about 2.62 handles. This ticker symbol, CL, of course, trades about 6,100 contracts a day. Today doing a little bit more than that, about 7,200, about 1.7 to 1 calls over puts, actually, which is of interest out here. But what caught our attention last week, as you recall, were some weekly Feb contracts expiring on the 2nd, so expiring on Friday. It was the Feb 2nd, 74.72 vertical was going up. We saw paper coming in, trading about 3,000 of the 74s. It's like crushing the bid for those for 85 cents, 3,000 times roughly, which is pretty much right in line with the OI, which it seemed like initially like it might have been a roll. And then we saw a ton of action on the Feb 72, the weeklies again, expiring on Friday. 72 calls going up 13,000 times roughly on the day. A lot of that was trading in $1.30 to $1.40 price range. And so it seemed like with that, 3,000 by 13,000 roughly, it seemed like someone was rolling down. But it was weird. It was after earnings, which is usually kind of a pre-earnings type setup trade you like to see. It was right around the at-the-money strike, so you're rolling from a slightly out of the money to a relatively further deep in the money call option, which is not a roll we see very often, let alone for more size on the more expensive in the money leg. And yet also weird, as you profiled later in the week last week, the OI didn't go up by, it was pretty much no OI on the 72s. And after 13,000 or so trade, the next day there was only about 7,000 open OI on that strike, which is interesting, which shows something weird was afoot. A lot of churning and burning. We speculated it might have actually been a newsletter, which is their kind of stock and trade, put a bunch on, put it out to the masses, which a lot of these trades went up in small blocks. Have them come flock in afterwards, a little bit of a pump and dump, and then dump it again afterwards, which would have accounted for why the OI wasn't that big. But still, there was about 5,000 or 4,500 still open of these 72 calls coming into Friday morning here, which is, of course, expiration day for these on Colgate-Palmolive. We did see some trading. You think someone would have maybe closed out what little they had left there. By the way, on Friday, Colgate closed at 72.43. So these were pretty much barely in the money by the end of the day after all that work to roll down. And we saw about 1,100, almost 1,200 trade on the day. Most of those, except for 200, pretty much sales. Most of them around the 40 cents. Some of them got as high as $1. They got in early and got them off for $1. So we did see some more closing out. But it still looks like Mr. Rock Lobster, at the end of the day, this was a lot of Sturm and Drang. Didn't really generate a lot of OI like we thought it would. And then the OI that it did generate didn't really close in any sort of timely or well-timed fashion. So this one is all sorts of weird, putting on roughly trading 13,000 of these 72s expiring on Friday. Roughly 4,000 or so of these things stay open through the end of the week, and then a bunch of them expire worthless. I don't know. This one is just a bit of a head scratcher. You still feeling newsletter for this, Mr. Rock Lobster?
I'm feeling newsletter. I'm feeling real bull. There was very bullish, and I'm feeling some sadness.
Yeah, there's definitely sadness. Someone really loved their broker up until they didn't. And this one, they just leave it on the tape. You can still get 40 cents at the end of the day. Take it. Why are you not taking it? The whole thing is just is odd to me.
It is because ball is high. I just spent all day putting out endless alerts, on just keep taking your money. Keeps going up. Keep taking the money if you're long vol options. Just keep going. You don't know how long it's going to go, but once you're there and you're up money, your options are a date. They are a hot date. They are not a marriage. So. Sell them when they want them. I learned that as an early newbie trader guy.
Especially when the weeklies are like a one-night stand. You got to get in, get out, be done. There's no lingering.
It's Tinder.
Yes.
They're the Tinder of option trading.
I'm surprised the exchanges haven't borrowed that for their marketing slogan yet. Weeklies, the Tinder of options. But swipe right, then swipe left really quickly. But yeah, this one just leaving a lot of money on the table, however you look at it. Just a weird trade in general. It certainly seemed like someone thought they had the goods on this one, had something well timed, why they would roll down into that weird, or maybe it wasn't even a roll, maybe just they were separate trades after all, just weirdly timed. Why someone would choose to do so much of a so in the money contract with such a short date to expiration and then not really unwind all of it. It's just a bit of a head scratcher. Just leaving money on the table everywhere we go. Speaking of craziness and head scratchers, today was like that. So let's get to some of your questions and our questions as well on the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
Speaking of mail, people are dogging this ongoing XIV debacle. Your boy Ophir here chiming in saying, Gottlieb, of course, of CMLB, he's saying it's offered at 69. I'm not sure how how he's getting that one. I'll have to dig.
What's offered at 69?
He's saying XIV. Oh, yeah, I'm looking at after hours. It's 72 now. It's 73, yeah. Weird.
It's. I think it could be done. I mean, they're printing VXX up another $20, so somebody is doing some mad covering.
Yeah, this is crazy.
Right
The closed listeners at 99 XIV, which I'm sure is some prohibition in there. They can't get above it. And then they're saying he's offered at 69, at 72, at 73 now. You're right. There's some mad unwinding being done here in the after hours, and none of it bodes well for the people who are out there slinging. Imagine that, 99 to 69, just in the after hours. My goodness. That's a quality. Yep. That's a quality product,
I would,
sir.
I don't think you want to buy the dip in the vol. You might want to, sell some put spreads in SPY or something like that. But the vol, I mean, it trades differently. So you're, at least if you get a sign to put in the SPY, you get something. Right now, if you bought the dip in the vol product, theoretically you could have, you could be in unhappy land. So you just. That's why you have risk control. That's all I can say. That's why you have
Crazy Town. He's chiming in now saying it's offered at 58 and that Japan is crashing. So apparently the endless volatility maelstrom continuing to unfold here. Yeah, so other people are tweeting this in now. Everyone's on this. The Milton FMR Institute people tweeting in that they're seeing it's at 71 to them. They're a little behind there, off 33 handles in the after hours. Yeah, we get it. XIV is getting just the crap kicked out of it by any stretch of the imagination. This will be interesting. But let's see, we were talking about us surviving until vol views, and maybe see if XIV can survive till vol views, Mr. Rothhauser. What do you think?
Right now, I think it actually is not probable. The way that, because they keep squeezing, like VXX, where VXX is trading. They keep squeezing that future so hard. I don't know whence it ends. I mean, I got call spreads that were just at the money this morning that are now $20 in the money. So that were long.
There you go.
So I'm just going to try to close them tomorrow and see what we get. But yeah, somebody looks like they have to buy a bunch of futures, and they're going to buy them today, and tomorrow who knows where things are. So it's just a very all the swings are extremely wild, and they're going to stay that way until they're not. So here you go.
This is a crazy town. So yeah, it's not like, not to toot our own horn, listeners, but not like we haven't warned you about these products before. These things, sometimes abstract vol constructions that people create for you to attempt to help you avoid the nuances of the futures market. Sometimes they have interesting issues, shall we say. And today would be a day that would reveal those issues. Speaking of today revealing issues, how many issues it revealed out there. We were trying to pin down for you guys, because we know you guys like your volatility guessing games, your VIX guessing games. So we started off in the session, about a little bit halfway through the session or so, looking at it. Right around the time, VIX was threatening, VIX cash threatening a nice 23. So we thought we'd ask you guys, hey, this is a pretty big move. Is this, you guys feeling this is zombie apocalypse time, or is it a great time to sell some vol? So we asked you pretty much in a nutshell where you think VIX, ask you to play a little crystal ball like we always play every week on Volatility Views. Where do you think VIX is going to finish the week? Is it going to be somewhere in the 21 to 25 range, or Crazy Town, which is above 25, or Frothy in the 17 to 21 range, or Bubbly, which is below 17? Of course, no sooner did we post that than VIX just blew right through everything, got up to around 35. So we said, okay, let's update this bad boy for our second updated question of the week, asking you really quickly. We already blew through 23, threatening 35, so we have to ratchet up our zombie apocalypse threshold a little bit. But quite simply, same question. You guys buying or selling these levels here? Where do you think where do you think it's going to close on Friday? So we upped our game a little bit, though. We said, is it going to be Crazy Town, which is now 30 to 35, or true zombie apocalypse mode, which is beyond 35, which we all know historically that 35 level is kind of the take your ball and go home level for a lot of people in the space. When VIX hits that level, they're going to get the heck out of Dodge. And so north of 35 could indeed be zombie apocalypse land. Or is it just going to be merely crazy in the 25 to 30 range? Or is it going to be mildly crazy, which is sub 25? Uncle Mike, we shall start with you, sir. What are you feeling? Are you feeling zombie apocalypse north of 35? Are you feeling mildly crazy south of 25? Somewhere in between? What are you feeling, sir?
Oh, good gosh. This is a tough one after a day like today.
Welcome to the Crystal Ball every week on Volatility Views, sir. Humiliating segment that it is, even though I tend to win it.
You are the man. I think we're going to be, I think we're going to end the week in the 20s. So I'll say 25 to 30.
So you would vote for crazy then, by using our nomenclature. That would be crazy.
I would be.
Crazy in every level. Mr. Rock Lobster, what are you feeling? What is your physician feeling by the close on Friday for VIXland?
Oh, my gosh. It's an early prognostication. I think I'll do the typical moment. I think we probably get a little more volatile during the week, but it settles down to mildly crazy. Below 25 by
only mildly
Friday.
Crazy, which when our earlier poll of the day would have been Crazy Town, but now it's just been downgraded to mildly crazy. It just shows you how frame of reference changes intraday, sir, when things like this are just hitting the fan. We got a bunch of other things in here. Let's see really quickly if we can get to this. Someone was asking us about this. Mr. Rock Lobster, Uncle Mike, you can play along if you will. Open up your Facebook, because someone was asking us, and I'm not sure we haven't had a chance to look at this, but someone wrote in, Matt Williamson, asking us, hey, what's up with these Facebook $5 calls? Yes, $5. In Jan of 2019, he says the OI is climbing past 12,000. So I thought we'd do a little live on-the-fly look-see and see what the heck our friend Mr. Williamson here is talking about. Facebook, as you know, listeners, closing today, even on a bad bloodletting day like today, still 181 and a quarter. So a $5 strike would be interesting. He says what? Facebook, Jan 2019, $5 calls. Yeah, he's right. There is some size OI here. About 11,670. Using the magic of live vol, see if I can see when that was opened. And actually, it looks like a lot of that was opened back on the 23rd when about 800 trading that day, 3,000 the next day, about 1,000 the next day. So somewhat, 55, oh no, that's 2,000 on the 26th. So it looks like they opened them steadily, a couple thousand a day over the span of roughly a week. And now they have about 12,000 open on that strike. I'm just looking. I see the pars. The pars have about a similar OI, about almost exactly similar. That would be a very funky vertical, 5-100. That, when I see a strike like this, I usually think something weird like a box. But you don't see a ton of boxes going up anymore just for the margin capitalization rules that make boxes prohibitively expensive for market makers to put up. So something like this usually would probably part of some weird, box interest rate type trade. And yet I'm not seeing the corresponding other legs on the puts and things that would warrant this. I don't know. I haven't had a chance to do any digging. Mr. Rock Lobster, you got any first blushes on this one while I try to dig a little bit?
Not really overall on this. I just looking at overall, but it is the stock that continues to grow. So it feels like, why would you write calls in 2019 in a growth stock like that? You think
they're writing these? You think these are overwrites on the 5 handle?
I I'm just no. I mean, but it's just I don't understand. Have they owned them for that long?
No, it seemed like at least according here to the data here, they only opened them like about a couple of weeks ago.
And just paying full price for the stock was just too much for them. They want that leverage.
They wanted that
baby.
leverage. That 5 handle was a nice number for them, Mr. Uncle Mike. Because the full 200 was too much, but saving that $5, that was where the action was.
They want that that 97% of it. They don't want to put on the whole 100% of it.
A $5 strike. You can't ask me questions like this.
That's the best. That's why I love our listeners. They throw us these crazy curveballs all the time. Well, Mr. Williamson, I haven't had a chance to really dig into this since your question came in. I will do a little digging and see. I do see that 2,000 of the Jan 2019 250s traded today. Actually looks like a bit of a conversion reversal on the 250 strike in January, which is weird. So there is some odd paper afoot out here in Facebook, out here in Jan. I'm going to mark this as a little bit of to be watched. Maybe we'll come back to it on Thursday's show when we have a little. Hopefully the markets will settle down a little bit. We'll have a little bit more time to digest this one. But it doesn't seem like what it would be at the first blush, which would be something like a box or something like that. That'd be the obvious answer. But I'm not seeing the other legs here that are open. And a 5-100, even though the OI lines up well, a 5-100 vertical makes even less sense than doing the 5s outright. So I don't know. This is all sorts of weird. Uncle Mike, you got more on this?
Yeah, I'm just thinking maybe this is some type of situation to where someone owns Facebook, wanted to sell Facebook, but they had some type of rule that they weren't allowed to sell their stock, but there might have been someone who made the rules that said that they didn't say anything about options, and maybe selling the calls was allowed, and he found a technicality. That's one thing to where I could see this possibly making some sense. I'm not sure if he maybe works at Facebook and they forgot to write that down, or maybe he works somewhere in the social media sector that says that you're not allowed to do any transactions on social media stocks. And he's like, oh, well, I own 6 million shares of Facebook, so I really don't want to own all those, so maybe I should just sell some calls. And he wanted to go about doing it that way. And maybe the person that wrote the rules said something like, you're not even allowed to buy puts on it either. So maybe he's like, okay, I'll just sell the calls, and I'm fine risking that $5. Maybe that's why he wanted to do it.
That makes about as much sense as anything else I've heard on this one so far. You're right. Some of these plans, usually that would be prohibited, but some of these plans, not so savvy when it comes to synthetics and things like that. So that could be a logical sense, and he couldn't obviously hit a 1 strike. 5 is as low as it goes, so he went that way. Interesting. I want to dig into these a little bit. You guys, if you have some thoughts on these, hit us up with your own ideas. Meanwhile, we got to keep rolling. It's time for our final segment, Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. Everyone's pretty much watching just this macro stuff now. I mean, it looks like we were maybe ameliorating the sell-off a little bit towards the close, and right after the close, bam, just selling off more in the after hours. Products like XIV seemingly coming unhinged. A lot of things to watch for the open tomorrow. That said, if you want more concrete things, there are some big names popping off tomorrow. We've got Chipotle after the bell. Snap, our old friend Snap, after the bell. Everyone wanted Snap options till they didn't, apparently. Then Wednesday after the bell, we got our old friend Tesla popping off there as well. I know a few of you, one or two, like to trade it. On Thursday, when we're doing the show again, we'll have NVIDIA to talk about, and everyone's favorite glue, GLU. No, we won't be talking. Twitter will be before the open. We can still talk about that one. We'll probably have some good hindsight to talk about there. When it comes to all things Tesla, and CBOE will be before the bell on Friday. All this VIX options and futures we're talking about today, that stuff accretes over there at the CBOE. So maybe you like to trade that one to see what's going on in the ball complex. Either way, some big names to pay attention to this week if you can't wrap your heads around the macro stuff, which I wouldn't blame you. It is getting pretty crazy town out there. Or should I say mildly crazy, or perhaps zombie apocalypse crazy. Vote on our poll. Let us know. That said, let's go back around the horn. Let's start with you, Uncle Mike. What are you watching for the rest of this week?
Oh, I mean, of course, everything macro at this stage. Want to see what's going on with the new Fed guy. We'll see. This is. I think this is a very good test for this market right now. We have earnings versus politics, and I shouldn't say that. This is a three-way battle to the death, it seems, of earnings, which is versus politics versus fiscal policy. Who's going to win out? Who's going to get their say? What's going to matter the most? And me being the bull that I am, I'm kind of hoping that earnings wins. And I think that even people that aren't bulls right now kind of hope that that's the case too, because I think we've had enough of politics and fiscal policy dictating this market the last 10 years.
It is kind of funny. It wasn't the threat of the bomb. It wasn't all the other myriad issues we had over 2017. It was this kind of all coming to a head with the new Fed share and the policy and everything else. This was the straw that broke the camel's back. Not many of the other legions of things, which you probably could argue were a lot more terrifying, but yet it's the specter of inflation at the end of the day, which undoes it all. Mr. Rock Lobster, same question for you, sir. What are you watching?
Yeah, to see if this future squeeze can last, if some of my beloved vol products survive. Snap was up 14 cents today, by the way. So obviously VXX is...
Oh, Snap is the uncorrelated asset you want to diversify. Forget Bitcoin,
exactly.
It's Snap.
And, to be honest, just looking at some bargain hunting and some names that I like. I'm still kind of partial to Google. I'm looking for more pair trades if the vol, if it becomes more tradable. And see how that all goes. I mean, NVIDIA is down almost $50 from its highs. Not too long ago. So yes, there are there'll probably be some bargains. They might be more bargainy tomorrow and get more bargainy, but I think there's a lot of great trade setups coming for this stuff. So to me, it's like you buy the vol and then you buy the underlying, even when the volatility is this high. That's still the best trade. It's the trade I've liked all year. Not much has changed. It's been good for our option pick clients. So there you go. I don't think much is going to change on it. I just think you just got to be prepared. The swings will be bigger.
Be prepared. Good market advice for any market, let alone what we're going into in the after hours here and indeed tomorrow. Hopefully we talked you through it, talked you off the ledge here a little bit. It was a weird one. Stay tuned for more weirdness probably to unfold tomorrow. All you XIV heads out there, I'm sorry. Maybe you should listen to our vol views earlier. Actually, it could have worked out. Like Mr. Rockoff was saying, there are some scenarios where that works out pretty well. So it could have worked out, not all bad. But still, those kind of products always leave a bad taste in my mouth when we have things like this unfolding. But it leaves a good taste in my mouth. Let's say, Mr. Rock Lobster, today I was off-put by all the madness in the VIX complex. And I said to myself, self, if only there was something out there that would purport to make VIX a little easier for me. Where could I go for such a thing?
You know what? This is such the game plan of something called VIX Made Easy that I developed at Option Pit with helping people to understand how it works. And our clients did extremely well. I mean, it's just you can't predict a day like this, but they did great. And you could learn how to trade the vol products. And coming up on the back of this will be VXX Made Easy. And if you just want somebody to show you how to do it, we've just launched our vol newsletter. There's preferential pricing until Feb 15th. You can actually learn how to trade vol and not run yourself over. Of course, it's not a guarantee, but people seem to like it.
There you go. Follow Mr. Rock Lobster at Option Vol there. Maybe he'll tweet out a link to the webinar archive, and then you too can research it. And when he does such a thing, maybe we'll retweet it. We'll be nice to him, and we'll share it with all the rest of you. Mr. Uncle Mike, if I was going to say to myself, I want to go into cash in this market. Maybe I want to do a little bit better than cash. Who should I call about that, sir?
By all means, call me. I think that markets like can be great opportunities, and that needs to be emphasized. I don't think it's prudent to have just blind money sitting in the markets with no plan in place. So if you want someone that actually likes to plan things, give me a call, 312-212-3531, or shoot me an email at mtusaw@rcmfs.com.
There you go. Hit the man up. He'll sling some skew for you. Maybe he'll save you a little money on ticket charges. He'll be known. He's been known to roll a put or two for his clients. So a day like today, not exactly the worst. I'm guessing his phone's ringing off the hook on a day like today, saying, "Get me more puts," or "Where can I get someone who'll buy me puts?" So there you go. Call him up if you are so inclined. And on behalf of the Rock Lobster and Uncle Mike, and even Mr. Meatball, who spun in there at the top of the show, and indeed myself. I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing. Hopefully, you survived today's madness, and we'll see you again on Thursday for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.